Welcome to the Bullpen, our monthly conversation about the markets featuring Tommy Grisafi from Advanced Trading based in Mayville, North Dakota. Tommy, as always, we appreciate this chance to connect talking markets.
And thanks, Don. It's been another wild month. I mean, absolutely crazy volatility, and we've been up, we've been down, but overall, at the end of the month, corn and wheat are at lower prices and soybeans are at a higher price. So a little something for everyone there.
As we begin August, obviously, we're moving into a very critical time for soybean development. Corn's pollinating. This hot, dry weather certainly has the market's attention.
Absolutely. So we have the haves and have-nots. I have clients who have plenty of moisture. You have areas like look at what happened in Kentucky this week, where they were in a huge drought area, and then that one area received like 12 inches of rain within a few hours. I mean, some crazy weather things. And for the most part, the people who are receiving rains are continually receiving rains. Where I live in Northwest Indiana, I was going to say Northeast. I had to think about where I live. Where I live in Northwest Indiana and Northeast Illinois, we've had some really great showers. Within the last week, we've had 4 inches of rain. And our crops here in the northern part of Indiana look wonderful. As you go to central Indiana, so as you go to southern Indiana and southern Illinois and all the southern states, there's some real problems. So we're going to have some major heat here starting in August. And of course, the American crops are a little behind, and they can catch up with the GDUs we've had. Overall, it's been a warm summer. But the heat starting August will very much affect the soybeans, and the soybeans are the flyer. I hate to say this for people who have big hope of much higher corn prices, but at this point, what's done is done in corn. And here in the next few weeks, we'll be setting up for how great of a crop it can be and what your top end can be, not necessarily will we produce a corn crop. So for some folks, extreme drought, but overall, when you look at the state of Iowa and how strong their ratings are, we know that the core corn belt's going to have a crop. Our friends in Minnesota that need the rain, I believe, caught it. So, we call each individual customer, see how they're doing on water. I'll tell you this, folks have become much more aggressive sellers and hedgers and protectors. And to me, that's a sign that that they're growing corn. Hey, 630, 625 corn's not perfect, but 625 corn with a bunch of bushels is probably better than 725 corn without the bushels. And that's where we are after the month of July in corn.
Just taking trips across North Dakota and Northwest Minnesota in the past couple of weeks, crop looks beautiful. But as you talk to growers, a lot of optimism, but certainly we're going to need a good long fall to finish this thing off.
Yeah, and you look at the area that you and I had traveled in on the crop tour, that boots on the ground we did. And I believe the wheat crop tour was traveling across the state this week, and you covered that. A good yield in wheat, phenomenal yield. Wheat got put in the moisture. It got put in late, but it got put in the moisture, and then the heat showed up. Hopefully not too much heat. And the next few weeks, several guys called yesterday, and they're going to get ready to start harvesting wheat here in the next few weeks. So we know the crop's behind, but there is a crop.
Let's switch gears over to what's happening overseas. A lot of attention on those key ports in Ukraine. Of course, a week or so back, we had Ukraine, Russia, Turkey, and the United Nations coming to an agreement on finding a safe corridor to move grain out of Ukraine. A day later, the Russians bomb the port of Odessa, but still talk that we're going to be moving grain here. It has to be a very unstable situation, though, Tommy.
Yeah, so there's boats that have been in the port since the war started. I think we're going on 5 months, Don. And those boats, here's the way I told our customers, at least Tommy Grisafi customers on Friday, there's 30, 40 boats that are loaded with grain that need to leave. If they leave those ports safely, nothing bad happens. There's mines in the water. There could be they could have missiles shot at them. Assuming they leave safely, that's very bearish, the markets, because we have all that grain that's in the Ukraine from last year and what they did plant and harvest this year. So when the war started, we had to take anything Ukraine was doing as far as the world markets and just erase it and scratch it off and say they're out of the game. But as they become in the game, if Ukraine's grain leaves, their new crop makes it to ports, and we don't know if they're shipping it half the time is who owns the grain or the origination. But if grain's flowing, and over the years to come, parts of the grain leaving Ukraine might not be called Ukraine grain. It might be Russia as this conflict moves forward. But from a world number, the grain's leaving. Now, if the United States produces another crop, which we are, you could have some pretty good selling pressure here coming into the fall. Typically, we see some of our worst levels around August 15th till the end of August. We tend to make harvest lows earlier here in the United States as the American farmer is well capitalized, has built additional storage space, and overall is getting better at planning forward selling their grain to the elevator. So I know very much from a cash standpoint, your local elevators want your grain. And as you know, up in North Dakota, there is just not a lot of grain left after the last few years of great demand, everything else that's happened, lack of crops, several poor crops in North Dakota. So there's a lot of space up north with people with their personal bins, elevators. Elevators are in the bushel business. And if they don't get to handle that bushel, they call it their handle, which several elevators in North Dakota have had a poor handle the last few years. It affects them very much. So there's a tug of war going on. I can see that the basis right up here till the end is very strong. And the ethanol companies and the end users who have some shipments they need the product. And then the elevators that have exports want to have those last few trains to get out. They need that product. Then we're going to have the harvest. It'll be a new combination. Grains, Don, are different. It's not like it's not like a tree. It's not like it takes 70 years to grow and then we have a harvest of that lumber. We grow a new crop every year, and other parts of the world are growing a crop every year. And when you combine that, as you know, in wheat, there's kind of always a world harvest going on. And the Ukraine situation disrupted that. It looks to me like we're getting back on track, and these high, lofty numbers we've had in grain prices will slowly start to go away, or in some cases, not so slowly. We've had some big down moves here in Minneapolis spring wheat. So look for more of a normalization in the grain markets as the world catches up in grain production, Don.
Tommy, the Fed also moved this past month with another interest rate bump. We're four straight, I believe, as we're looking at interest rate increases, another 3/4 of a basis point right here in this month of July. What's that doing as far as the threat of inflation?
Well, it's going to calm inflation. It's also going to slow the economy down. Anyone looking at homes, say the old days, you could afford a $400,000 home for $2,200 a month payment. That $2,200 a month payment may only buy you a $300,000 home. So as far as the home and homes are so important to the American economy and home builders, it should help a little bit on that pull and tug, which means a lot of people who think they can afford a home are going to be living in an apartment for an extra year or two when they see how much more money they have to spend on that payment. Of course, all businesses use money. Most businesses have to have a relationship with the bank, and the cost of borrowing money is going up, has went up 4 rate increases this year. So we're having a reset on global interest rates, not only in the United States, but a week ago you saw a move through the ECB. And overall, we spent too much time at artificially low rates. Now we're getting back to what, as you and I would say, is normal. Maybe younger people don't realize that there's interest rates, and that's the cost of borrowing money. But that's what our government, our Fed, that's the tool they have to calm inflation. We're still getting high inflation numbers. Optimistically, though, on the inflation side, see crude oil's tempered a little bit. You can see it at the pump. Everyone's seeing the gas in the lower force. But the problem, Don, is America runs on trucks and diesel, still around that 550 national average for diesel, which will very much affect the American farmer as an expense. Other inflation issues, labor calming down a little bit, seeing some layoffs. So on one hand, we're saying, oh, inflation's calming. People are laying off people. And then that kind of gives relief to other companies who need to hire labor. So the effect is that it slows down the economy. Now, the irony in all this is, as we speak of today, the United States stock market had a massive rally here ending July, one of its best months since, I believe, possibly since April of 20, if I remember the Business Channel saying that yesterday, one of our best months in the last 24 months here in stock market trading. So a little irony that the Fed raises 0.75 and the stock market explodes. Again, there's a lot of money looking for a home. Sadly to say, rich people are still rich. I don't mean that sadly, but if you're a cheerleader for people from the bottom in the middle moving their way up, the middle class, things have gotten a lot tougher for the last year. The lower, whatever lowers considered, people on government subsidies, whatnot, people who need help, life's gotten very hard. Food's expensive, fuel's expensive, life's expensive, healthcare's expensive, so many costs. And again, that vicious cycle, the rich are rich and the poor are poor. And that gap is becoming wider and wider.
Tommy, again, we're wrapping up 1 month, moving into another. Anything else we should be alert to as we move into this month of August?
Yes, I would change your mindset, and from the world's running out of grain and prices are highs and there's inversions, and getting back to understanding the economics of marketing grain, producing grain. Start thinking about 2023 crops. I did some aggressive hedging for Dees 23 and Nov 23. We may do this broadcast 1 year from now and be at a much lower price in grains across the world, Don. Put this genie in a bottle and see what happens.
No doubt. Tommy, as always, thanks for joining us.
Thank you.
Tommy Grisafi, it's our monthly look at what's happening in the market news. Tommy from Advanced Trading based at Mayville, North Dakota. Until our next edition of the Bullpen, I'm Don Wick from the Red River Farm Network.